To order. The title of today's hearing is America on Fire, FIRE being an acronym for Financial Independence, Retire Early. Will the crypto frenzy lead to financial independence and early retirement or financial ruin?
Your fiat system is leading to financial ruin.
It is my pleasure to open the second in a series of Financial Services Committee hearings on issues related to cryptocurrency and digital assets. Most of us in this room are old enough to remember these financial calamities that cost so many so much. The 2008 mortgage crisis, the Allen Stanford Ponzi scheme, the Bernard Madoff Ponzi scheme.
The fiat system allows for these failures.
In each of these cases and in others that I haven't enumerated, investors and financial institutions suffered severe losses, then sought and/or received bailouts from the federal treasury.
The connected fat cats got bailed out and the working Joe got the shaft.
Their refrain seems to have been, keep the government out of my life until I lose money. So today, we ask, will there be a bailout of digital asset investors if their investments' market value drops to zero?
We don't need the government to pick winners and losers. This results in corruption.
If we believe that such is not the role of the federal government, should there be an amount or form of reserves required to backstop digital securities should they fail? Or instead, are today's investors in digital assets entirely reasonable in expecting the federal government to provide a backstop in certain cryptocurrencies should these digital assets become large enough to have a systemic impact on our economy? If so, should there be greater federal oversight and rating agencies to evaluate the risk and performance of these digital assets?
Bitcoin doesn't need the government to help. Bitcoin relies on math. Bitcoin is transparent, honest, and colorblind. All the things the government is not. Those who invest in other crypto assets do so at their own risk. It's best to simply buy and hold Bitcoin, not crypto.
Today's hearing will consider the answers to these questions and assess the systemic risks to the economy, as well as the risk of loss to individual investors posed by recent periods of extreme volatility in crypto assets that are not backed by any form of tangible collateral.
Bitcoin is backed by math. I trust math. Altcoins are backed by promises. That's not a good plan. In either case, the government should not help.
It is now my pleasure to yield to the ranking member, whom I must congratulate, Mr. Emmer. Congratulations on your new station in life. And we yield to you for 5 minutes for an opening statement. I do look forward to working with you.
Thank you, Mr. Chair. I too look forward to working with you. I appreciate you holding this hearing today, and I thank you, and I give a big thank you to our witnesses for appearing before the committee. I look forward to all of your testimony.
I can't wait to hear from these witnesses.
Financial technology and cryptocurrency are the future of the global financial system.
Sorry, Tom, but Bitcoin is the future, not crypto.
In general, fintech lowers the barriers to entry to the traditional financial system and offers all consumers, no matter where they are, the ability to access convenient financial services at low competitive costs. Cryptocurrency is no exception, as we have seen from the huge consumer demand for these innovative assets backed by technology that is permissionless, open, and private.
Hey, Tom, I love you and I love your suit. But it is not assets, it is not crypto, the solution is Bitcoin. This isn't complicated. Skip the altcoins and buy and hold Bitcoin.
Cryptocurrency allows people to transact with each other in real time across borders for very little cost in a way that is so transparent and verifiable that it maintains more trust, actually more trust, than traditional financial transactions with a third-party intermediary.
Well said, but you are describing Bitcoin. Don't be afraid to say it. Using the term cryptocurrency might confuse people, and they may make the mistake of buying an altcoin.
Most importantly, cryptocurrency and blockchain technology unlock access to opportunity. The open source nature of these technologies offer millions of Americans the opportunity to study the underlying code, develop blockchain projects, and launch their own businesses, all without having to ask anyone for permission. That's an incredible opportunity. Over the last few years, I've been fortunate to meet with many great crypto and blockchain innovators.
If you're talking about altcoins, we don't need that kind of innovation. We need to focus on Bitcoin because Bitcoin is our best chance for freedom.
During our discussions is that they so badly want to develop their new crypto and blockchain ideas right here in the United States, but they don't because of continuing uncertainty with federal regulation and perhaps more importantly, the lack of enforcement of existing laws and regulation. They're afraid to launch new projects that, for example, might classify them to be a, quote, money transmitter, even though their work has nothing to do with money transmission. Still, the thought of having to comply with an overburdensome state-based money transmission licensing system in the United States is too much of a challenge for these entrepreneurs to be worth their time and their investment. So they head overseas, where the regulatory compliance is more streamlined. I've also been told by two co-founders of a company who are in the midst of developing a new blockchain network.
Please tell me you're not talking about an altcoin. Do you really think we need those projects? We have had 10,000 of them come and go. I think we should just focus on Bitcoin.
That they wanted to hire American developers, but because there isn't a streamlined process at the SEC to determine what is a security, they couldn't pay American developers with their token. So they actually went out and hired a team of developers in Europe instead, where they can confidently comply with existing regulation. As I mentioned, fintech and cryptocurrencies are the future of finance.
No. Bitcoin is the future of finance. We don't need centralized projects. We already have centralized finance, and that isn't working out too well. And that's only working out for those who are on the right side of the power brokers.
But we're missing out as a country because American entrepreneurs are still unsure of how to navigate our existing regulatory system. This means high-tech jobs are going overseas and capital formation opportunities for everyday Americans are being missed. All part of the chilling effect that comes when we do not answer the questions that industry leaders and consumers are begging for. Questions like, what digital assets are a security? What digital assets are a commodity? What digital assets are currency?
Bitcoin is the only digital asset worth holding for the long term.
Answering these questions will keep innovation here in America and unlock new opportunities for every American to access. To conclude, let's be clear that these things are already regulated, but we need clarity in application and enforcement of the existing laws and regulation. There are also areas where we can and should streamline our regulatory framework to ensure that we realize and benefit from crypto investment and innovation right here in the United States. I look forward to learning from the witnesses how we can address these challenges, and I yield back the remainder of my time.
The gentleman yields back. The chair now recognizes for 1 minute the chairman of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, Mr. Sherman of California, for an opening statement.
I can hardly wait.
Thank you so much for this time. Those in the cryptocurrency space are naturally pro-crypto. Their fortunes, their relevance, their fame depends upon the success of cryptocurrency.
You forgot our freedom also depends on Bitcoin.
Cryptocurrency is something you can bet on. But if people want to have the animal spirits to take risks, I'd prefer them invest in equity markets to support the building of American companies, or the California lottery to support the schools in my state.
Just to be clear, all coins are gambling, but Bitcoin is our only hope for freedom.
Cryptocurrencies are highly volatile. So if one person makes $1 million and retires at age 45, and 9 lose $100,000, Coinbase makes money. The one millionaire goes on TV and says how wonderful it is, and 9 others do not retire in dignity, but instead become eligible for Medicaid.
Or you can buy and hold Bitcoin and skip the lottery and earn on average 200% a year.
Cryptocurrencies can ultimately be successful only if they're successful currencies. And evading the know your customer rule is the one thing that cryptocurrencies have as an advantage to the US dollar.
Bitcoin has many advantages, not the least of which is you don't control it.
Cryptocurrencies have the political support of the patriotic anarchists who are rooting for tax evasion. I hope we shut it down.
You mean your banker friends hope we shut it down?
The gentleman's time has expired. The chair now recognizes the chair of the full committee, Ms. Waters, for an opening statement. The gentlewoman from California.
Thank you very much, Chair Green. Congress and regulators face many challenges as we grapple with how to best regulate cryptocurrencies, including cryptocurrency issuers, exchanges, and investments. This committee is committed to providing not only more transparency in this minimally regulated industry, but ensuring appropriate safeguards are in place.
Bitcoin is regulated by math. I trust math. It's my safe place.
And so we have begun a thorough examination of this marketplace. Today, I look forward to hearing from our panel about the risk of fraud and market manipulation that can hurt retail investors and regular consumers. Furthermore, I look forward to learning about the systemic risks presented by hedge funds rushing to invest in highly volatile cryptocurrencies and cryptocurrency derivatives.
So, it's best to simply buy and hold Bitcoin. No need to make a federal case out of this.
So thank you, Mr. Green, for convening this hearing today, and I yield back the balance of my time.
Thank you, Madam Chair. The chair now recognizes for 1 minute the vice chair of the subcommittee, Representative Williams of Georgia, for her opening statement.
Thank you, Mr. Chairman, and thank you to all of our witnesses for joining us today for this critical conversation. Often in Congress, it's up to us to write the rules of the road while the road is being built.
Bitcoin has rules for all to see, no backroom deals here.
This rings especially true when we talk about the rapid development of digital assets. We have to be sure that the legislative and regulatory frameworks governing digital assets keep up with the pace of innovation. What's at stake? Ensuring financial innovation is appropriately serving all the people.
Bitcoin is permissionless and worldwide. Pro tip, get yourself some.
The people of Georgia's 5th District want financial services that are responsible and help them improve their lives. And it's our responsibility to make sure that any financial innovations, including in digital assets, meet that bar. I look forward to our discussion today. Mr. Chairman, I yield back the balance of my time.
Girlfriend, this isn't complicated. Just help them get some Bitcoin and stay away from the altcoins.
Thank you. Chairman Green, Ranking Member Emmer, members of the committee, thank you for the opportunity to testify today. My name is Eva Su, and I'm an analyst in financial economics at the Congressional Research Service, focusing on capital markets and securities regulation.
Ms. Su, we'll allow you to start again. Would you kindly depress, there's a button there to turn on your microphone.
Yes,
If it's on, would you bring it closer to you, please?
yes. Is this better?
A little, but could you bring it a little bit closer, please? Let's try that.
How about this way?
I think that's better, but if you could bring it a little bit closer. As close as you can. Thank you.
Yeah, how about here?
Okay, we'll try that. Let's see if that
Okay.
works.
Not a very good start for our first expert. How many tries does it take a government expert to adjust a mic?
Great.
Thank you.
Chairman Green, Ranking Member Emmer, members of the committee, thank you for the opportunity to testify today. My name is Eva Su, and I'm analyst in financial economics at the Congressional Research Service, focusing on capital markets and securities regulation.
Maybe you should focus on buying and holding Bitcoin. Just saying.
CRS provides Congress with analysis that is authoritative, confidential, objective, and nonpartisan.
I can save you time. Bitcoin is regulated by math. We're all good.
Referenced in my written or oral testimony are for the purposes of informing Congress, not to advocate for a particular policy outcome. In recent years, financial innovation in capital markets has fostered a new asset class, digital assets, and introduced new forms of fundraising and trading. Digital assets, which include cryptocurrencies, crypto assets, or crypto tokens, among others, are digital representations of value.
Again, I can save you time. Just skip the altcoins and other projects and simply buy and hold Bitcoin.
The current regulatory landscape for digital assets is perceived by certain industry observers to be fragmented.
Bitcoin is regulated by math and a clear set of rules that everyone must follow to be part of the network. This is called fair play.
Multiple agencies apply different regulatory approaches to digital assets at the federal and state levels, regardless of the terms used to describe digital assets. Depending on their characteristics, some digital assets are subject to securities laws and regulations that are designed to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. Others, such as Bitcoin and Ethereum, are not considered securities.
Actually, Ethereum should be considered a security. So as always, it is best to stick with Bitcoin.
And generally not directly subject to those requirements. The Securities and Exchange Commission is the primary regulator overseeing digital asset securities offerings, sales, and investment activities. My testimony focuses on issues related to digital asset securities regulation. Digital assets' increasing presence in capital markets raises policy questions regarding whether changes to existing laws and regulations are warranted. If so, when such changes should happen, what form they should take, and which agencies should take the lead. The current innovative environment is not the regulatory regime's first encounter with changing technology. In the past, some technological advancements have led to regulatory revamps, whereas others were dealt with through the existing regime. Regulatory oversight generally strives to balance the need to foster financial innovation with the objectives to ensure market integrity and investor protection as well.
Bitcoin has integrity and investor protection covered.
In general, policymakers contending with major financial innovations have historically focused on addressing risk concerns while tailoring a regulatory framework that was flexible enough to accommodate evolving technology.
This isn't complicated. Just skip the altcoins and buy Bitcoin.
Current developments that raise policy issues include, first, digital asset exchanges. Some industry observers perceive digital asset trading platforms as functional equivalents to securities exchanges in buying and selling digital assets. But these platforms are not subject to SEC regulation.
It's best to skip the trading and simply buy and hold Bitcoin.
potentially making them less transparent and more susceptible to manipulation and fraud. Second, digital asset custody. Custodians provide safekeeping of financial assets. Digital assets present custody-related compliance challenges because custodians face difficulties in recording ownership, recovering lost assets, and providing audits, among other considerations.
Not your keys, not your Bitcoin.
I'm the Director of Financial Policy at the Open Markets Institute, where my work focuses on financial regulation and consumer protection. Previously, I worked as a computer programmer at Morgan Stanley in electronic trading and at Merrill Lynch and Deutsche Bank as a business analyst serving the equity derivatives trading desks. Earlier this year, the blowup of a single family fund, Archegos Capital, led to $10 billion in bank losses after the firm's bets on about a dozen total return swaps imploded.
Damn, they should have just bought Bitcoin.
Because these sorts of derivatives aren't currently reported to the Securities and Exchange Commission on Form 13F, banks and regulators alike were entirely in the dark about Archegos' positions until it blew up.
Bitcoin fixes this.
The extent of hedge fund and family involvement in cryptocurrencies lives in a similar regulatory blind spot. Chairwoman Waters, to her credit, has introduced discussion draft legislation to try and address some of these concerns with Form 13F.
Form 13F should say buy Bitcoin.
And I believe that Congress and regulators should also consider requiring that hedge funds report their cryptocurrency positions on this form. If a majority of hedge funds with billions of dollars in assets under management begin to hold significant positions in crypto, as certain surveys indicate they are interested in doing, it may produce dire risks for financial systemic risk and may induce future crises, as volatile swings in the cryptocurrency markets could lead to things like forced liquidations on their assets.
So they should just skip the altcoins and buy Bitcoin.
In addition to hedge funds, large too-big-to-fail banks and Silicon Valley venture capital firms are also a growing presence in crypto. VC firms have already invested $17 billion in crypto firms so far this year, which is more than 3 times what they invested in all of 2020.
It's so early. Folks using the term crypto, do they think it's cool? Are they hipsters?
If you combine this with the fact that some cryptocurrencies have a majority of their supply held by a very small number of people, it raises concerns around concentration.
So stay away from altcoins. This is not complicated.
Take one example. As of February, the top 20 largest Dogecoin addresses held half of the cryptocurrency's entire supply.
You do know that Dogecoin is a joke, right?
There are also broad investor and consumer protection concerns in cryptocurrency that I have personally observed as a user of crypto exchanges and DeFi platforms.
You should stay away from those scams. Stick to Bitcoin.
In traditional financial markets, barring a serious liquidity crisis, if you buy something, you can generally assume you can sell it back, especially with a stock. But on DeFi protocols like Uniswap and SushiSwap, anyone can upload a new cryptocurrency token. Anyone can add a liquidity pool for it, including malicious actors who design tokens that can be bought but never sold.
Bad actors in DeFi? I'm shocked.
These so-called honeypot tokens are so prevalent that some DeFi protocols include an explicit warning about them on their website. Some crypto investors try to read the smart contracts or code of new coins to look for common pitfalls and avoid scams, but this is an extremely high bar for non-programmers.
Some need to touch the hot stove a few times before they learn.
Some of the more concerning areas I've seen in DeFi are on platforms that offer derivatives. Frankly, it reminds me of the over-the-counter derivatives marketplace before Dodd-Frank, which I worked in as a banker in the late 2000s. Things like the US-based DYDX, Open, which offers options on cryptocurrency, and Ribbon Finance, which offers structured products based on crypto. Recently, CFTC Commissioner Dan Berkovitz said in his speech that unregistered DeFi exchanges may not be legal under the Commodity Exchange Act. I've also used a DeFi protocol called PancakeSwap, which often advertises very eye-popping annual percentage rates in exchange for locking a pair of cryptocurrencies into the platform's liquidity pools.
If it sounds too good to be true, it probably isn't.
APRs are probably not the right metric to attempt to use for what the crypto community calls yield farming, as the rates can vary wildly even on a single day. But just to give you one example, in early May, PancakeSwap posted a tweet saying you could get a over 100,000% APR if you stake or locked in your Dogecoin on PancakeSwap. They later stated that that special rate was only there for 13 days, which is questionable to use for an APR. Users complained that the rate offered was nowhere near what they were advertising on Twitter, yet they tweeted again the same day that, quote, "The longer you wait, the less free money you get," end quote.
I'm shocked that gambling is going on here.
I believe that Congress should continue to examine if there are regulatory gaps that require new legislation in order to ensure consumer and investor protection in crypto and avoid systemic risk. Regulators should continue to monitor the space and ensure compliance with existing laws. Thank you, and I look forward to your questions.
Actually, it would be more efficient if folks just simply bought and held Bitcoin.
Thank you. Thank you, Chairman Green, Madam Chair Waters, Ranking Member Emmer, and members of the subcommittee for the opportunity to appear before you today. And thank you to the subcommittee staff for their hard work in putting together this hearing. My name is Christine Parker, and I'm a partner in the New York office of Reed Smith. I'm actually joined today by my colleague Trevor Levine, who was kind enough to brave the heat to come to DC with me. My practice focuses on regulatory enforcement and transactional matters related to commodities, derivatives, and digital assets. I routinely advise both regulated and unregulated digital asset market participants in connection with a number of different federal and state regulatory and prudential regimes. At the outset, I want to note that there are a lot of use cases for blockchain and digital ledger technology for which cryptocurrency serves as the fuel.
Here we go with the blockchain, not Bitcoin trope.
I urge this subcommittee to engage with organizations that are working at the grassroots level to establish industry-sponsored voluntary self-regulatory associations for digital asset and crypto markets on both a global basis and at the national level, because I think there is a lot to be learned from them.
You should urge the subcommittee to buy and hold Bitcoin. If they do, they will thank you later.
I also want to point out that if we are going to innovate how we regulate these new markets, it really calls for a new kind of financial regulator.
With Bitcoin, we have that covered. We use something called math.
At a minimum, we need financial regulators that reflect the diversity of retail investors who are active or want to become active in the crypto markets. As advocates for responsible innovation, I don't think the crypto industry has been very good at pushing forward diverse voices, but we can and we should and we will do better on that front.
Bitcoin is open to all and totally colorblind.
However, we are here today to talk about the retail investors who are trading in the crypto markets. And I know there's been a lot of focus on the recent volatility in these markets. And what does that mean for Congress, for the regulators, and for retail investors?
It's not a good idea to trade. Best to simply buy and hold Bitcoin.
Just a quick point. The volatility in the crypto markets, I think, is not solely attributed to their lack of regulation. I will point out that crypto exchanges such as Gemini and Coinbase are not regulated like the Chicago Mercantile Exchange and the New York Stock Exchange, but they are regulated by the New York Department of Financial Services as limited purpose trust banks. They're subject to AML, KYC requirements as any other federal or state regulated bank. And they're subject to the Commodity Futures Trading Commission, the CATC, has anti-fraud and anti-manipulation authority over the purchase and sale of Bitcoin and Ethereum on these trading markets and has actively used that authority in this space. Separately, volatility is not unique to the crypto markets. Last April, the crude oil market went negative. And in February, natural gas markets were incredibly volatile due to Winter Storm Uri. And there are products that are offered on CATC regulated exchanges that are available to retail customers that are based on market volatility. So some investors are actually seeking out assets that are based on volatility on these very highly regulated exchanges.
Most traders get wrecked. Folks need to know their limitations.
That being said, the question that we're really grappling with today is how do we best protect retail customers who are actively trading in the crypto markets? I think it's somewhat problematic to just sort of simply equate the crypto markets with terrorism, tax evaders, and bad actors. Realistically, every member of the subcommittee has a law-abiding constituent who enjoys trading crypto.
They should get another hobby and simply buy and hold Bitcoin.
So what is in the best interest of this constituent of yours who's trading crypto right now? Access to crypto markets that operate under a clear regulatory framework with both customer protection mandates and opportunities for risk that are commensurate with the suitability of the investor. Right now, we have an absurd patchwork of regulatory regimes at both the state and federal level. We have regulation by enforcement, interpretation, guidance, interpretive guidance, and public statements from regulators.
I'm shocked that the government isn't good at things.
One regulator says that a crypto asset is a currency, another says it is a security, and the outcome of that is incredibly harmful to retail customers. This lack of clarity stifles innovation in the US and frankly drives retail customers to foreign exchanges. So how do we better regulate cryptos?
Simple. We use math.
The CFTC and the SEC should be empowered by Congress to move quickly to provide retail investors with a broader array of regulated crypto products that are attractive to market participants, but come with the robust market oversight of these regulatory regimes.
They should move quickly to buy Bitcoin.
This should happen now. Congress should also direct the SEC to immediately create clear, workable criteria as to which digital assets are securities and therefore subject to US security laws and regulations.
That's right. They should act ASAP. The longer they wait, the more they will have to pay to acquire some precious Bitcoin. By the way, mine is not for sale.
Second, while regulators in New York and Wyoming in particular have been very crypto-forward regulators and will continue to be leaders in this space, Congress needs to pass legislation to provide for the federal preemption of the current state-by-state licensing requirements for the direct purchase and sale of cryptocurrency. This will ensure that these transactions are subject to the level of market oversight that we currently have in the futures and securities markets. The logical regulator here is the CFTC, but you must ensure that you fully fund them so that they can take on this mandate.
They should use all available funds to buy Bitcoin.
Thank you for the opportunity to speak today, and I look forward to your questions.
Thank you, Ms. Parker. Ms. Hammer, you are now recognized for 5 minutes to give an oral presentation of your testimony.
Chair Green, Ranking Member Emmer, and members of the subcommittee, thank you for the opportunity to testify today. My name is Sarah Hammer. I am Managing Director of the Stevens Center for Innovation and Finance and Senior Director of the Alternative Investments Program at the Wharton School of the University of Pennsylvania.
That's a good school. I hope they taught you to buy Bitcoin years ago.
I also oversee the blockchain laboratory within the Stevens Center at Wharton. Additionally, I am adjunct professor of law at the University of Pennsylvania Law School, where I teach an upper-level Juris Doctor course on financial regulation.
Do you teach your students to buy Bitcoin and skip the altcoins?
Before I proceed, I'd like to note that the views I express here today are my own and not the views of the Wharton School or the University of Pennsylvania. Blockchain is a shared immutable ledger that facilitates the recording of transactions in a network. Today, blockchain technology infiltrates and powers a myriad of institutions, functions, and assets in the United States and globally.
The only valid use of blockchain is for Bitcoin.
The use cases for blockchain are too numerous to cover in detail here, but they include decentralized finance, enterprise blockchain, cybersecurity enhancements, and even addressing climate change.
You have to be joking.
The subject of today's hearing is cryptocurrency. At the outset, it is worth noting that there is no official public data source for cryptocurrency prices, market size, or volatility. This lack of data is a significant problem. However, unofficial data sources have estimated that the total value of the cryptocurrency markets may exceed $2 trillion. Investors in cryptocurrency include retail, high net worth, and institutional investors, such as private funds, corporations, and endowments. Retail investment in cryptocurrency may give rise to particular concerns about investor protection, given the possibility of fraud or business failure, the lack of disclosure, and the high level of price volatility.
If investors buy and hold Bitcoin, they don't need any protection.
The Securities Exchange Commission is charged with a tripartite mission of protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. At the same time, the SEC faces challenges in applying capital markets and securities regulation to cryptocurrency. Chief among these is whether the SEC has the authority to regulate a particular instrument. Currently, the SEC evaluates crypto sales through the lens of a test known as the CHUY test, which evaluates whether an instrument qualifies as an investment contract for the purposes of the Securities Act. While the SEC has applied securities regulation to dozens of initial coin offerings based on the CHUY test, there is still a lack of clarity as to whether it applies to a number of crypto transactions that currently do not comply with SEC registration and disclosure obligations. In addition, a number of exchanges that offer trading in crypto, including those that meet the definition of a security, do not register with the SEC.
I can save you time. All coins are securities.
Given this, there is a strong need to establish a clear, sufficient, and appropriate regulatory framework for cryptocurrency. I turn now to the issue of systemic risk. As discussed, the value of the cryptocurrency market is estimated to possibly exceed $2 trillion, and it is characterized by very high levels of price volatility. Additionally, estimates are that more than 2,000 different cryptocurrencies currently circulate globally. For context, estimates of subprime debt prior to the Great Financial Crisis are less than $1 trillion. Moreover, since no official data source exists for crypto markets, financial regulators are at a distinct disadvantage in evaluating their regulatory options. Because of the infiltration of crypto into so many institutions, functions, and assets, the potential risks must be carefully evaluated in a coordinated fashion. In light of the risks and considerations of crypto, a myriad of agencies, states, and international standard-setting bodies are implicated. Thus, a key question for regulation is, how should we proceed, and in what forum? Importantly, a government authority already exists that could support the development of a clear, sufficient, and appropriate framework for regulation of crypto.
Or they could simply buy and hold Bitcoin.
Established in 2010 by the Dodd-Frank Act, the Financial Stability Oversight Council is the appropriate forum to engage in evaluating and addressing potential systemic risks, convening and coordinating federal rulemaking on issues that touch multiple agency jurisdictions, and consulting with state and foreign regulatory authorities. I believe that by leveraging the authorities of the FSOC to support the development of a clear, sufficient, and appropriate framework for crypto, we can address concerns about fostering innovation, providing consistency, establishing global reach, and balancing our regulatory objectives. Thank you.
Our objective should be buying and holding Bitcoin.
Chairman Green, Ranking Member Emmer, members of the subcommittee. Thank you for the invitation to speak with you today. My name is Peter Van Valkenburgh. I'm the Director of Research at Coin Center, which is an independent nonprofit that's focused on cryptocurrency public policy. The Bitcoin network has been processing transactions for longer than Uber has been offering rides. Bitcoin and other cryptocurrencies have enabled 3.1 billion transactions in the last 10 years, securing over $2 trillion in value. If cryptocurrencies were unregulated to this day, would that not be an incredible failure of our regulatory system? As I'll outline, it's not a failure because over the last 10 years, cryptocurrencies have been regulated. Some of that regulation, of course, does come from the technology itself. The scarcity of Bitcoin, a total supply of only 21 million, is not preserved by the goodwill and honesty of the participants on the network. It's secured by a transparent, peer-to-peer accounting technology, a public blockchain, that makes fraud trivially cheap to detect and absurdly expensive to commit.
Yup, I trust math.
But much regulation has also come from the federal and state governments. The on-ramps and off-ramps where people buy and sell Bitcoins for dollars and safekeep them are heavily regulated. They are state-licensed money transmitters, or else they are chartered banks and trust companies. Before offering any services to Americans, they must prove minimum capital requirements, post bonds, and open their doors to yearly examinations. They are also classified as financial institutions under the Bank Secrecy Act. They must register with FinCEN, know their customers, and share the details of suspicious activities with law enforcement. Cryptocurrencies like Bitcoin and Ethereum are commodities.
Actually, Ethereum should be classified as a security.
But many crypto assets meet the flexible definition of an investment contract and are therefore securities, which means their issuance and their trading are regulated by the SEC.
It's best to pass on the altcoins and simply buy and hold Bitcoin.
Cryptocurrency derivatives are regulated by the CFTC. Finally, anyone who markets a cryptocurrency service or tool that is deceptive or fraudulent is liable under various laws enforced by the CFPB, FTC, SEC, CFTC, and state attorneys general. And the results of all of this regulation speak for themselves. In 2020, only 0.34% of all cryptocurrency transaction volume involved a criminal sender or recipient.
Honest and freedom-loving people buy and hold Bitcoin.
Despite several high-profile hacks of overseas exchanges, no American exchange has suffered a substantial hack or loss of consumer funds. Operators of money laundering exchanges overseas have been arrested. Sales of unregistered tokenized securities have been targeted by SEC enforcement, and criminal ransomware rings have had their servers seized and their ransoms recovered. All of this has happened by sensibly applying existing laws to the cryptocurrency space. We don't need new regulations. And all of this has also happened while preserving the fundamental value of cryptocurrencies as open access platforms for financial services and innovation.
Here we go with the cryptocurrencies term again. Can we just stick to Bitcoin? After all, we're trying to help folks here.
Unlike any other transactions technology that works online, an open blockchain network is accessible to people that banks and tech companies would rather ignore than serve. With the rise of central bank digital currencies from authoritarian nations happening in tandem with the rise of Bitcoin, we are at a decision point as an advanced technological society. Are we willing to accept some risks if it means we can eliminate the choke points to economic participation that further inequality and stifle innovation? Or would we prefer to strengthen those choke points and outlaw alternatives in the hopes that a powerful elite will smartly choose who should and should not have access to powerful tools and volatile markets? For every transaction that we want blocked, there is another transaction we should celebrate for being unstoppable. Yes, there are some criminals making payments on the Bitcoin network because banks won't bank them. There are also pro-democracy activists in Belarus and anti-police violence protesters in Nigeria taking donations on the Bitcoin network because local banks won't bank them. Nonprofits Bisol and Feminist Coalition in Nigeria raised millions of dollars in Bitcoin donations last year. Donations they were forbidden from accepting by a corrupt or otherwise uncaring banking sector in their respective countries. In America, we don't always agree. But no matter what, we are tolerant and expect everyone to have the opportunity to stand up and fight for their own vision of the good. Crypto innovation embodies that aspiration. It's rough around the edges, but holds some values above all. Every node is an equal. No one's voice should be censored, and work rather than privilege is what counts in consensus.
Well said, Peter. I like intelligent hot guys, and I love your suit.
Thank you very much, Mr. Green. Ms. Goldstein, earlier this year, PricewaterhouseCoopers released their third annual survey of hedge funds in the cryptocurrency market. According to this survey, cryptocurrency currently accounts for 10 to 20% of all assets under management for 1 in 7 hedge funds. Over 60% of the hedge funds surveyed expressed a desire to start investing in cryptocurrencies or to accelerate their existing investments in cryptocurrencies by the end of 2021.
Yep, they should buy as much Bitcoin as they can as soon as they can.
Hedge funds often manage funds on behalf of mutual funds, pension plans, and other institutional investors, which affect millions of regular consumers and investors. Ms. Goldstein, do you see any systemic risks associated with hedge funds investing heavily in cryptocurrencies? And I'm more interested in this just having listened to the last presenter who talked about the choke point that we should not be so concerned about. What do you think?
The risk to investors is if they don't buy enough Bitcoin and keep their money in fiat instead.
Thank you, Chairwoman Waters, for the question. I'm very concerned about the presence of hedge funds in cryptocurrency. I think we've seen with the Archegos meltdown this year that when banks have prime broker relationships with hedge funds who are conducting, or family funds as Archegos was, who are doing risky things, it can redound to the taxpayer-backed financial system. Credit Suisse lost billions of dollars. All the banks lost some $10 billion. If hedge funds get farther into crypto, they don't care about direction. They'll go long, they'll go short, they can use leverage. There are lots of cryptocurrency exchanges like FTX and Binance and many others that allow people to use insane amounts of leverage, 100 times to 1. And hedge funds are the perfect client to use those sorts of leverage. So what happens if a huge number of hedge funds who have prime broker relationships with too big to fail banks all happen to be in similar crypto positions, whether it's long or short, and there's massive volatility in the market? They may have to sell some of their other assets. It may lead to margin calls in their non-crypto assets, which could lead to forced liquidations and sort of redound to the banks themselves in the form of counterparty risk. So
Let me ask you, are there any reporting requirements hedge funds must comply with that would provide regulators and the general public more transparency regarding which hedge funds are most heavily invested in cryptocurrencies and which of these institutional investor counterparties may also be exposed to potential risk?
Chairwoman, there are not, to my knowledge, because cryptocurrency is not currently reported on the Form 13F. It's not seen as an ownership interest. And so regulators are essentially totally in the dark about what hedge funds' cryptocurrency positions are, and I suppose have to rely on the financial press or trying to figure out based on the transactions on the blockchain and de-anonymize certain addresses and figure out who are the hedge funds. But there's no formalized way for regulators to know how much hedge funds are in crypto.
All that to say, traders often get wrecked. It's best to simply buy and hold Bitcoin.
Thanks to the panel for being here. It's a very important hearing we're having here today, and I think it's something we need to be looking at. But one of the aspects of being here is a lot of times people draw a line in the sand very early on, and they take an early position on something, especially when it's dealing with technology, because it's something either don't understand or there's this fear factor. And I've seen that with cryptocurrency because a lot of times we don't see the forest for the trees. And in this case, I think there's something that we miss out on because we have either decided we're for or against cryptocurrency. And that part we're missing out on is the blockchain technology that's underlining, which I think is very valuable for us in this nation.
Very. Oh, God. Why is this complicated? Barry, please let's not get started. Okay. Barry, please, let's not get started with the blockchain. Oh my God. The blockchain, not Bitcoin thing. Can we just delete this video? Barry, please, let's not get started with the blockchain, not Bitcoin thing.
Especially in the federal government. And I have been advocating for a long time that we utilize, or at least we look very strongly at using blockchain technology as a solution to our crypto, or not our crypto, but our cybersecurity issues here in this nation.
Oh my. Do you really think blockchain can help the federal government? Barry, you're a funny guy.
When you consider the federal government, and we know that we've had cyber attacks, there's been loss of data, and people's personal data has been inadvertently disclosed, caused a lot of issues. That isn't that hard to do when you consider how many points my personal information and others' personal information reside within the federal government.
The solution is to stop taking people's personal information in the first place.
I mean, there's duplication of data in every place that my social security number, my date of birth, my address, phone number, all of this resides is another a system that's susceptible to attack. And all it takes is one weak link. And then you've exposed it. I mean, if you look at it as a veteran, my information's in the VA. From years of working in business, it's been with various departments, Social Security Administration, you name it, IRS. You look at all the different databases. I did a count one time, there could be 47 different data points that just my information would reside. And all it takes is the breach of one of those.
Again, I'm shocked that the government isn't good at things. Stop the presses. This is big news.
Because of the decentralization of blockchain, it seems to me that that may be the solution to the cybersecurity problems that we have in this nation. So, Ms. Hammer, is this something that you would agree with, and can you describe how the blockchain technology could be used to enhance cybersecurity?
Pro tip: the only proven legitimate use for blockchain technology is Bitcoin.
Congressman, thank you for that excellent question. I appreciate the chance to talk about the potential benefits of blockchain technology. It's absolutely something that I would agree with, and certainly something that we work with on a day-to-day basis at the Stevens Center at Wharton.
I hope you're working on the Bitcoin blockchain, because otherwise you're wasting your time.
As you mentioned, blockchain is a decentralized technology, and that is key because it has no single point of failure. So there are many different uses for the technology in addition to cryptocurrency. With each new block in blockchain, the previous blocks are stored, and this creates a fully traceable history log. So it can potentially have many cybersecurity applications. Blockchain can therefore be used to create security profiles for user data, such as you mentioned, and it protects the data by decentralizing it. In addition, blockchain technology incorporates something known as public key and private key security. So public key infrastructure, much like an email address, can be used to authenticate and authorize parties. And private keys can be combined with it for end-to-end security and encryption of our data.
I hope you're referring to the Bitcoin blockchain, because it is the only blockchain with robust security.
Blockchain can be used for many different means in cybersecurity. It can decentralize security devices, such as a home security system, to discourage hackers. It can protect websites by decentralizing domain name servers, such as separating an IP address from a name. And it can be, in fact, combined with other security protocols like biometrics in order to strengthen our cybersecurity options. So I fully agree there are many applications for blockchain technology, and it's important for us to remember this is the technology that powers crypto. But the technology itself also has many applications, and we behoove ourselves to consider those innovative possibilities.
You must know that most uses for blockchain technology are pipe dreams. Can we try to get back to reality?
And that's the challenge I've had is separating what some would consider the stigma of cryptocurrency from blockchain.
Bitcoin is freedom. Most other blockchain projects are wishful thinking at best. It takes a huge amount of energy to properly secure a blockchain. No one is going to spend that kind of money on some alternative use case.
In the remaining time, I got one other question that if you could answer. Do you have concerns with a potential central bank digital currency?
Your question is silly. There's no reason for a blockchain to be used for a centralized currency. The whole reason for Bitcoin is to decentralize control.
Thank you, Congressman, for that excellent question. And I know that central bank digital currency has been the subject of other hearings in this forum. And certainly it's something that's being studied really across the country by many different academics and not-for-profits. I think it's important to consider that central bank digital currency could take many different forms. It could be blockchain powered, it could be not blockchain powered and run along a traditional database system such as we do currently. There are concerns about central bank digital currency. Some of them relate to issues around privacy and whether it actually achieves the objective of having a central bank digital currency, because rather than a decentralized system, which cryptocurrency is or blockchain is, having a central bank digital currency would concentrate our private information and therefore could potentially be a target for hackers. At the same time, I recognize there
The
are some...
gentleman's time has expired. Would you kindly give the rest of your answer in writing and submit it?
Absolutely. Thank you.
Thank you very much. And when I have my time, I may give her the opportunity to finish.
Sarah, you wouldn't have run out of time if you simply answer the question by saying a central bank digital currency using a blockchain is a silly idea.
Mr. Van Valkenburg, if I could with you, inflation is a concern for people across the country, certainly in my district in West Tennessee. I know in an interview recently, you talked about or you advocated essentially that a consumer may want to buy Bitcoin because it could be a way to balance an investment portfolio against the threat of inflation. Could you expound on that, please?
Sure. So the intuition here is fairly straightforward. Bitcoin is the world's first digital commodity, and it functions rather like gold, except it's gold that you can send peer-to-peer over the internet. Now, as to the wisdom of any particular investment in a portfolio, I think most people agree that diversity is how we can achieve greater financial stability for ourselves and for our major institutions. And so my point in that previous interview was simply that as part of a diversified portfolio, one might be interested in owning some Bitcoin, along with some gold, along with some stocks, American industries, overseas industries, in order to achieve some balance and a hedge against the risk of inflation, should we see it being pronounced.
Only invest in Bitcoin, any wealth that you wish to protect.
And you may have answered this, but would you advocate that strategy for the, lack of a better word, the average retail investor?
So I think we've got guardrails in place now for these Bitcoin spot markets, for example, that make that a safe bet as long as we have good investor education, which is always a perennial problem. But if you go to the right places, the American-run companies, they are state licensed money transmitters, they're New York Department of Financial Services chartered banks and trusts, and these are safe places where a customer will be given clear information about what they're buying from a person who's posted a bond, approved minimum capital requirements, and has a robust regulatory structure around them to ensure investor protection.
Actually, the only protection they need is to buy and hold Bitcoin and skip the altcoins.
Thank you, sir. I thank you. I thank the other witnesses, and I yield back.
Gentleman yields back. The chair now recognizes the gentlewoman from Michigan, Ms. Tlaib, for 5 minutes to ask her questions.
Thank you so much, Mr. Chair. We all know cryptocurrency like Bitcoin currently consumes enough energy to power a small nation.
Securing freedom is worth any amount of energy consumed.
And the Cambridge Bitcoin Electricity Consumption Index is one of the most cited cryptocurrency energy estimates. Right now, it estimate sits actually at analyzed consumption of 66.14 terawatt hours. That's actually around a third of the energy consumption of Facebook, Google, Amazon's data centers combined. But due to the decentralized nature of cryptocurrency, even the Cambridge model is just a small, not precise estimate. And their upper bound is probably as high as 159 terawatt hours each hour. As Bitcoin miners compete against one another for increasingly scarce tokens, energy usage increases.
As miners compete, more efficient sources of energy are developed.
And so, one of the things I want to talk to you about, Mr. Valkenburgh, how can we better measure the energy consumption and energy resources of cryptocurrency to the account for its carbon footprint?
If you understood Bitcoin, you wouldn't have asked this silly question.
I agree that the Cambridge data is our best shot right now at looking at this question. What we have a benefit of is knowing everything that the peer-to-peer ledger tells us. It's shared and open. It's not a proprietary standard from a corporation. And the peer-to-peer ledger shows us how much work these miners are performing to make sure that transactions get in blocks and they're not censored by some third party or some government that wants to coerce certain transactions or block certain transactions. It's this vibrant competition between miners that guarantees that the miners cannot form a cartel and choose to systematically exclude certain persons from this financial system. When you have them compete and when you have their evidence of their competition in the form of proof of work calculations on a public ledger that any person can audit independently, you get that censorship resistance. As far as energy usage, I'm sorry.
No, go ahead. I need to get to my next question because I really want to talk about the carbon.
Peter, she doesn't want to learn about Bitcoin. She simply wants to attack it. She wants some red meat.
Footprint.
Okay. I'll be brief. I'm sorry. So as far as energy usage, it's worth noting that the traditional financial sector uses an estimated 5 times more energy than Bitcoin.
And Bitcoin is free and open to the entire world's population.
Now, granted, the traditional financial sector moves more money, but it is worth noting that Bitcoin energy usage does not scale per transaction. So most of the costs are the fixed costs of setting up an open peer-to-peer system that's robust. And we have technologies like the Lightning Network that can bundle millions of transactions into that existing system without a meaningful increase in energy. So it's possible we can have an open financial system that's censorship resistant using 1/5 of the energy of the current financial system.
Peter, she doesn't want to hear that. She just wants you to say Bitcoin is useless tech and a total waste of energy.
If we were to eventually move more transactions.
Ms. Goldstein, thank you. Ms. Goldstein, is cryptocurrency fundamentally incompatible with carbon neutral future?
Congresswoman, thank you for the question. I think it depends. It depends on the cryptocurrency. It depends on which system it uses for validation. So proof of work, I would argue, is the most carbon intensive of the validation systems in cryptocurrency. This is the one that Bitcoin uses. This is the one that Ethereum currently uses, but is trying to move away from.
Proof of work is the only viable way to properly secure a blockchain.
And that's because it's effectively a lottery system. Any miner can try and compete for the 6.25 Bitcoin reward that is generated every 10 minutes. And everyone is essentially trying to guess the address of the next block. Some people describe this as solving complicated math problems. But you have a lot of people competing for a single reward, and it generates a lot of energy. I think as more cryptocurrencies embrace different validation methods, whether it be proof of stake, proof of history is another one, perhaps the footprint could be reduced, but it seems unlikely that Bitcoin will move away from the proof of work.
Other non-Bitcoin blockchains are not secure and shouldn't be part of this discussion.
Method, and as you cited, the Cambridge index, when crypto was very high, when Bitcoin reached its highs in May. We saw an estimate of 143 terawatt hours, which is more than the consumption of Argentina and more the consumption of Norway. And so I think the answer is it depends, but I think the proof of work validation method is a climate incompatible.
Well, no, it's just a recent study out of China suggested that without taking any actions to curb the greenhouse gases produced by electricity generation for Bitcoin mining, that they could see like 130 million tons of carbon per year. So, Mr. Chair, my point is climate crisis is here. We need to do everything we can.
So you trust China? Wow.
In our power and our purview to really truly reduce carbon footprint. And so many other things that we're trying to do in addressing that. I saw firsthand what was happening in my community as we saw record rainfall. But I really do appreciate this committee hearing, and I yield.
You should really educate yourself about the benefits of Bitcoin, including the development of efficient energy systems around the world.
Thank you, Mr. Chairman. Some of my Democrat colleagues have painted a broad brush against cryptocurrency as the purview of charlatans and scammers. In fact, Mr. Sherman has called for an outright ban on cryptocurrencies in the U.S. If we could, just for a moment, take a deep breath and heed the words of President Obama's own CI director, Mike Morell. In a recent report, he said that Bitcoin's use in illicit finance activity today is extremely limited and that blockchain ledgers are a highly effective crime-fighting and intelligence-gathering tool. He urged for a more fact-based dialogue between industry and government to ensure real risks are mitigated and the opportunities for potentially revolutionary technologies are not squandered. Mr. Van Valkenburgh, is this the road we are headed down? Are cooler heads prevailing, or will alarmism win out?
Cooler heads in Congress?
So I've been lucky to have the job that I've had for the last 6 or 7 years now, where we've gotten to meet with all the regulatory agencies that have some piece of jurisdiction over cryptocurrency, both in the Obama administration and now in the Trump administration. And I've always been impressed by the level of knowledge of that one person.
Peter, you are quite the diplomat. God bless you.
Or maybe small group of people within the agency that's focused on this technology and focused on reasonably applying the existing rules to the risks presented by the technology. I think at the regulatory level, we've seen cooler heads prevail for a long time, and I'm grateful for that. We've had reasonable regulation from an anti-money laundering standpoint, counter what Representative Sherman suggested. We've seen KYC and AML at all of the U.S. exchanges and robust suspicious activity reporting. And I've talked to law enforcement who have actually said they prefer doing investigations when it's on an open blockchain network because there's a single source of truth, which is a ledger, rather than a number of dubiously well-held records at international financial institutions.
Bitcoin is free and open. It is ruled by math.
Sure. Thank you. Thank you for that answer. It really frustrates me when I hear members of this committee imply that Americans are not smart enough to know that investing in cryptocurrencies carry risk, or even the capital markets more broadly. We heard a similar tone in the GameStop hearings as well. They won't come right out and say it, but I find it insulting that members of this committee feel that their constituents don't know what they are doing when they make investments.
That's right. Sometimes investors need to get burned before they learn to simply buy and hold Bitcoin. They don't need the government to hold their hands every step of the way.
Good morning to everyone, and thank you, Chairman Green and Ranking Member Emmer, for hosting this important hearing. And of course, thank you to the witnesses today. I think it's easy to fall into a trap of believing that cryptocurrency is too technical for everyday people, that trends like GameStop and crypto are funny, weird coincidences that might make you rich. The fact is that the crypto market represents more than $2 trillion in assets, and $2 trillion matters to everyone. In this committee, it's our responsibility to look out after the financial system. I watched my neighbors lose their homes in the great financial crisis, and many neighborhoods in my district never recovered.
The central bank fiat system is rigged to benefit the fat cats and bankers at the expense of the little guy.
I'm glad that that we have not faced another crisis like this yet, but I'm very worried about the future.
At the rate the Fed is printing money, you should be worried.
The fact is, we don't know all the risks cryptocurrencies create for us, and we know that cryptocurrencies are extremely volatile.
This is why it is best to simply buy and hold Bitcoin and skip the trading and skip the altcoins.
We know that some of our largest banks are figuring out ways to get into them.
They should be smart to simply buy and hold Bitcoin like everyone else.
But we don't know how concentrated ownership is, and we don't know how exposed our hedge funds already are. So in short, we know that crypto is big, but we don't know all the threats that it can pose.
But we do know the dangers of the current fiat and banking systems to the little guy.
To Alexis Goldstein regarding open markets. Ms. Goldstein, it seems like many of the cryptocurrency proponents are at least honest. They want to get around regulations. How much of the appeal of cryptocurrency is just regulatory arbitrage instead of real innovation?
Jesus, you really should study Bitcoin. Bitcoin is the definition of innovation for the 21st century. Only fire, the wheel, the printing press, electricity, and possibly the automobile are in the same league as Bitcoin's transformative potential.
Thank you, Mr. Chairman, and thank you for calling this very important hearing on a topic that's been on the minds of many of us. The issue of crypto assets is so important to us because we must understand what the financial marketplace of the future will look like.
With Bitcoin, the future is financial freedom.
Digital assets present an exciting new frontier with the potential to bring the unbanked into our economy. In fact, 12.2% of Latinos and 13.8% of Black households were unbanked in 2019 compared to only 2.5% of white households.
El Salvador's President Nayib Bukele is taking steps now by making Bitcoin legal tender. The U.S. Congress should stop asking silly questions about crypto and follow Bukele's lead toward financial freedom for all humans.
This is not the first time I've discussed that, and I'll continue to discuss it. While cryptocurrency is a new frontier, we must be cautious to make sure that we protect consumers from any avoidable risks.
The risk is letting time go by without buying Bitcoin. Your fiat is going down in value while Bitcoin is growing stronger.
We need to bring the disenfranchised Americans to the financial fray, but we must also look at the bigger picture to make sure that we do not inadvertently allow a system to grow that grants too much market power to a few decision makers.
This is why we need Bitcoin. Math is the decision maker.
It's our job as lawmakers to protect the consumers from financial abuses. This includes protecting the sovereignty of the US dollar. We cannot allow anyone to compete with our US dollar.
The US dollar is being debased. The reason intelligent people are buying Bitcoin is it cannot be debased by central bankers meeting behind closed doors.
Without a sovereign dollar that represents the primary form of currency in this country, we risk destabilizing our financial markets, and I would also suggest that it would destabilize global markets.
The current fiat-based financial system is corrupt and benefits the few at the expense of many.
We must protect the value and merits of the US dollar, both in cash and digital form. Stable coins such as Facebook's diem preventing sovereignty risk to our domestic currency. In other words, there is a risk of these stable coins replacing the US dollar and undermining the Federal Reserve's ability to perform its critical functions as a central bank.
The Federal Reserve System is failing most citizens. I would rather trust math. Math cannot be influenced, bribed, or otherwise corrupted.
The World Economic Forum has warned its member countries of this risk, and the Bank for International Settlements has urged countries to form their own central bank digital currencies so they can offer access but still protect and still protect the sovereignty of their currencies. Last Congress, I introduced a bill to regulate managed stable coins as securities. Pegging them to a currency without proper regulation like Facebook has done with Diem is a step forward, but it does not address all the risk. Ms. Goldstein, I wanted to start with you. How urgent is this need for regulating stable coins and protecting the US dollar?
We don't need stable coins. Bitcoin is the hardest form of money mankind has ever seen. A Bitcoin standard means worldwide freedom and the end of tyranny.
Congresswoman, thank you for the question. I think stablecoins it's an urgent need for regulators to look into them. Thankfully, we've already had state attorneys generals looking at the problem. Letitia James in New York has looked at Bitfinex, which operates the Tether stablecoin, and they've recently reached a settlement, and so Tether, you can no longer buy Tether in the state of New York. But I think there are a lot of questions about what is Tether actually backed by. They recently had to disclose a number of their reserves, which included commercial papers and cash-like products, but they had very little actual cash. They had some commodities, they had some other digital assets. And I think, there was recent reporting, I believe it was in the Financial Times, where they asked some of the large banks who tend to be one of the major counterparties for commercial paper, and they said they hadn't done any business with Bitfinex. So who are they doing business with?
Alexis, long-winded answers like this waste a lot of time and energy. You should simply say, all we need is Bitcoin. We can pass on the altcoins and stablecoins.
I think this is an opportunity to make sure that stablecoins are actually based on something, right? And we're not just relying on faith, that it's actually pegged to some.
Only Bitcoin is backed by math and huge amounts of energy securing the monetary wealth of owners. Fiat, stablecoins, and altcoins are all only backed by questionable promises.
Denomination of the US dollar or another currency. And I think one perhaps way to approach that would be to have central banks issue central bank digital currencies. But that's not the only way we could tackle it.
Right.
Alexis, I know why you were laughing. A central bank digital currency is a joke.
Well, and we hear from some, well, you can't do that. It's not about regulation. We can't go in there as a government and always just regulate. We gotta allow for innovation. Do you see that it is possible to strike the balance where we protect those innovation and we allow that to occur, but balance the need for the sovereignty of our dollar and balance the protection that we need for consumers?
Bitcoin doesn't need artificial balance. Bitcoin is governed by math and hard work that follows consensus. If the fiat system was run properly, we wouldn't have needed Bitcoin.
Congresswoman, yes, I think we absolutely can achieve that balance. I don't think it's unreasonable to want to ensure that something that pretends to be pegged to one US dollar actually is and isn't capable of breaking the buck and people losing their funds. That's not to say that there isn't existing problems in the financial system, right? I think there may be similar problems with, money market mutual funds, right? And they're sort of
existing problems in the financial system. Alexis, you have a talent for understatement.
Ability to peg themselves to the dollar and break the buck, but we can always do better, and we can strike the right balance to both protect consumers and also encourage innovation. I don't think that they're in conflict.
The best way to protect consumers is to allow them to buy and hold Bitcoin.
In a way, I'm sort of encouraged by today's hearing, because I think there's more broad agreement than is normal in this committee, at least amongst the panel, the majority of the panel, that we do need clarity. We do need clarity with respect to how we are going to regulate in the space, because we are pushing a lot of the innovation overseas. I hope we get that clarity.
I'll give you clarity. Buy and hold Bitcoin.
You also say that regulators are hesitant to get involved when relevant members are, your words, relevant members are hostile to crypto. Subcommittee chairs on this specific committee, they would qualify as relevant. I won't.
They qualify as relevant but not hostile.
Right. Some potentially. So, assuming regulators are listening, and I didn't want to put you in that box there, but you did say it. Listening, I'd encourage them to listen to the full committee and not.
Anthony, you can't be talking about dear old Brad, the good-looking webcam guy.
Quote relevant members who say ridiculous things, like people should invest in the California lottery.
Anthony, you're not telling me a congressman would suggest citizens should invest in the lottery. Tell me it isn't so.
Instead of cryptocurrency, and suggest that if it's possible to lose money, that some people are going to make money and others are going to lose money, that whatever that thing is, whatever that instrument is, its effective should be banned.
Yes, it isn't the government's job to hold our hand throughout life and control everything we do.
And also people who suggest that because there are money launderers and bad people who use cryptocurrencies, and there are, we know that, that it should be banned. I would like to cite a statistic by Katie Hahn, who broke up the Silk Road scheme a while back. 99.9% of money laundering with fiat currencies goes unprosecuted. 99.9. So, the commentary around whether we should allow cryptocurrencies to exist on AML lines, I would ask, compared to what? Compared to fiat, where 99.9% goes unprosecuted.
Anthony, please don't bring facts into the discussion. We want to hear wild, inflammatory statements that make no sense, just so long as they disparage Bitcoin and those who would want freedom.
So I want to shift now to Mr. Van Valkenburgh. Another comment is made, well, it's highly volatile. And because it's highly volatile, there is necessarily systemic risk, and we should ban it because it's highly volatile.
Those who have invested in Bitcoin over the long haul have seen returns of 200% plus per year. That's the kind of volatility I like. Only weekends trade and buy altcoins and often get wrecked.
Here's some bubbles in the crypto space. 2011 went from $1 to $31 down to $2, no systemic risk. 2013, 13 to 266 down to 65. 2015, $65 to 1242 to 200. And then obviously in the last year, we've seen it go from a couple thousand to 60 grand, back down to 30 and bounced up. At any point, Mr. Van Valkenburgh, did the federal government have to step in and prop up the cryptocurrency markets or save anybody?
No, by definition, cryptocurrencies are unbacked. We've heard some members question whether that's wise, but something that's not backed doesn't have promises associated with it. And so there aren't promises to be disappointed and someone to be bailed out in that case. It's like gold. How would you bail out the price of gold? Who would you pay?
Bitcoin is all about personal responsibility. A true Bitcoiner trusts the Bitcoin network and is invested for the long haul. We don't need the government to help.
Exactly. And then with your final or my final minute, I'd like to talk to you. There's a comment that people are going to lose money, and that's definitely true. Can you compare blockchain and cryptocurrencies to the early internet? Maybe use the pets.com and Amazon analogy if you could.
Absolutely. So these are brand new systems that do something amazing. They allow people across the world to coordinate, to perform, and provide a service that previously could have only been performed and provided by a big company. So just like the internet suddenly gave us the ability to all have our own blogs and not necessarily have to rely on the New York Times or the Wall Street Journal, the nature of Bitcoin is quite radical. It allows us to rely on ourselves in addition to centralized entities. And the radicalness of that innovation is something that people will get excited about for the right reasons and sometimes overexcited for the wrong reasons. So I think it's a good metaphor.
Right. And so there is risk in the system, but with risk comes great reward. And if you want to ban risk, well, guess what? You also ban reward and you ban innovation. And so I thank you for all that. And with that, I yield back.
Well done, Anthony. My only critique is you should use the term Bitcoin as opposed to crypto or cryptocurrencies. We don't want to confuse people. If we do that, they might accidentally buy an altcoin. That could be a disaster to them.
Gentleman yields back. The gentleman from California, Mr. Sherman, who is also the chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is recognized for 5 minutes for questions.
Wait a minute. This clown is supposed to be protecting investors, and he's the one who recommends that they invest in the freaking lottery? Are you kidding me? We can't make this stuff up.
Especially after the last gentleman's comments, I have a lot to say. I'll use my 5 minutes to say them. Of course, as I pointed out in my opening statement, and thank you, Mr. Chair, for allowing me to make an opening statement, those who live in the crypto world have their relevance, their fortunes caught up in making this successful. We're told that, well, cryptocurrencies are fun and useful, and there might be somebody in my district who enjoys trading them. Well, one thing that would be useful would be a $10,000 bill. It would occasionally be used to buy an automobile, but it would be uniquely valuable for those drug dealers. We'd make their lives so much easier when they have to deal these $100 bills. Imagine if they had a $10,000 bill.
If it wasn't for your never-ending war on drugs, this wouldn't be an issue. Bitcoin fixes this.
And our natural tendency is to try to facilitate and help people do their financial transactions. But I, for one, am not looking for a more accurate heroin scale to make sure that one drug dealer doesn't get cheated by another. We're told that that you have to be for blockchain because, rather you have to be for cryptocurrencies. Otherwise, you're anti-science. I am for the internet. I am for semiconductors. I am for computers. I am for blockchain. That does not mean I have to be for a cryptocurrency.
Sorry, but the blockchain is Bitcoin. Bitcoin is the internet of money.
Or for that matter, for that $10,000 bill that would make the lives of some of our constituents easier. We've got to keep pace with China.
Brad, did you just say that out loud? You want to follow China's totalitarian lead? You want total control over everybody? I get it. I understand.
China is close to banning all cryptocurrencies. They are going to protect their economy, protect their currency, and protect their tax collection system.
Brad, I noticed you didn't mention them protecting their citizens. Was that an oversight?
If we fail to keep up with China, we will fall behind.
I, for one, am not a big fan of China. Just saying.
The biggest threat to Bitcoin is Ethereum. The biggest threat to Ethereum is Dogecoin. The biggest threat to Dogecoin is Catcoin, Dogcoin, and Hamstercoin. There is an unlimited number of potentially popular cryptocurrencies. Compare that to sovereign currencies.
Correct. There are many altcoins. They come and go. Bitcoin is the clear market leader, and the smart money folks are buying and holding Bitcoin.
There are a limited number of nations, but even then there are 4 or 5 big economies. The Uruguayan peso will never displace the US dollar. But will Ethereum displace Bitcoin? Will Hamstercoin displace Ethereum? And oh, by the way, if people are going to take the time and effort and the intelligence to create new cryptocurrencies, will they have a back door so that they can have a few $1 trillion of their own?
Centralized altcoins are often designed to enrich the creator. This is why you should stick to Bitcoin.
We're told that's impossible from the same people who say it's impossible that between 2017 and 2020, more than $19 million worth of Bitcoin and Ethereum were successfully double spent, effectively counterfeiting those supposedly tamper-free currencies.
Brad, you're a funny guy. Bitcoin has never been hacked, and the double spend you are referring to didn't happen on the Bitcoin blockchain. Remember, Bitcoin, not blockchain.
We are going to have one cryptocurrency after another, and those cryptocurrencies will have less and less protection. I want to commend Rashida Tlaib for talking about the effect on our planet, and I ask unanimous consent to put in the record this article from the Wall Street Journal detailing how whole coal plants that had been mothballed, that were no longer being used, are putting back online just to create electricity to mine Bitcoin. And one of our witnesses,
the document will be entered into the record.
one of our witnesses says that traditional financial systems use 5 times as much energy. Yeah, that's to do 500,000 times more transactions. Everything that's purchased on this planet at the retail level is purchased with a sovereign currency.
Hey Brad, the Lightning Network on Bitcoin is still in its early stages. Give it a little time. Folks said silly things about the internet in the early days as well. Back in 1994, many said congressmen would never be live streaming funny comments over the internet, and yet here we are. Just wait until Bitcoin hits its stride.
It's the 5 times is a tiny percentage. We're told that that the cryptocurrencies can be a hedge against inflation. We know that currencies are supposed to be a store of value. Well, the dollar does erode in value, perhaps 0.25% a month.
Brad, you just said the quiet thing out loud. You are debasing dollars that ordinary folks work hard to earn. Why are you doing that? Does it benefit your banker friends?
You can buy Treasury inflation-protected securities and be fully protected from inflation. Or you can say that you're trying to get a good store of value, so you're going to invest in a cryptocurrency that could lose 1/4 of its value if there's a joke on SNL, as there was recently, and as we saw, a nearly 1/4 drop.
Or you can skip the altcoins and buy and hold Bitcoin. Long-term holders always come out ahead.
We're told that we're going to have know your customer at the level where you're trading and investing. But ultimately, Bitcoin is supposed to be a currency. And so you transfer it to your individual wallet, and there it's totally anonymous. Yes, the records are maintained forever, anonymously. And with that, you have the perfect tool for those who are underpaying their U.S. taxes by $1 trillion a year, concealing $3 trillion a year in income, and that means perhaps $30 trillion that has to be hidden every decade.
So let me get this straight. You want a total surveillance state where the government knows everything the citizens do? This sounds like China.
Only with cryptocurrencies can we evade the effort to enforce our tax laws. That's why cryptocurrency is popular.
The gentleman's time has expired.
I yield back.
The chair will request that the gentleman place his question in writing for the record.
Thank you.
The chair will have to.
Brad, you are one scary guy. All I can say is, wow.
Move to the gentleman from Ohio, Mr. Davidson, for 5 minutes for questions.
I thank the chairman and really appreciate this hearing. We've come a long way in Congress and just by having this hearing. So thank you. Thank you for the colleagues that have taken time to prepare for it. Some know the topic very well and some are just getting acquainted with it. And some, no matter how well acquainted, will remain hostile to the idea. Look, I won't spend long on Mr. Sherman's remarks, but
Warren, please do. Come on, let that clown have it.
China is building the creepiest surveillance tool in history. We should absolutely not emulate them. The whole fact that China is doing that is why we should be embracing decentralized distributed ledger technology that is more secure and does protect privacy. We could actually go further to defending freedom and restoring our Fourth Amendment constitutional protections in the financial sector by embracing the potential of this technology, not by being hostile to it. The third-party doctrine has annihilated the whole concept of privacy. And yes, we absolutely should keep the country safe. I could spend a lot longer, but I'm reminded of Proverbs 26:4, so I won't spend longer on his comments.
Suffice to say, Bitcoin equals freedom.
Dear friends, I do have some consternation. And my consternation emanates from 2008, when I, as a member of this very committee, sat down on a lower part of the dais. And I was here when then Secretary Hank Paulson appeared. He sat right out in front. I remember Cleaver was to my left, I believe, and Scott was to my right. The secretary wanted $700 billion. He had approximately, I thought, 5 pages asking for $700 billion. I've since read that it was 3 pages. Be that as it may, $700 billion to bail out what were called exotic products at the time.
Compared to the most recent bailouts, 2008 was peanuts. All too often, the government bails out the fat cats and bankers at the expense of the citizens.
$700 billion. Well, as you can well imagine, my constituents were up in arms. They were calling me by the hundreds, demanding that I vote against a $700 billion bailout. Being the good steward that I am, I voted against it. And as I stood in the cloakroom and I could see the tabulation of votes, there also was a monitor, television monitor, and I could see the monitor indicating that the vote was failing, and the stock market was directly proportional to what was happening with the vote. As the bill failed, the stock market was going down. The next day, my constituents were calling by the hundreds. What is wrong with you? You voted against the bailout. My 401k is now at risk. I learned an important lesson. Do what you think is in the best interest of your constituents, even when they may disagree. This hearing is taking place because I think it's in the best interest of my constituents that we get a better understanding what we're dealing with.
It's in their best interests that they buy and hold Bitcoin.
I remember Secretary Bernanke. I have a statement from him that I'd like to read, and I'll do this quickly. Here's what he said. He said, this is Chairman Ben Bernanke, former Federal Reserve Chairman, that the $182 billion bailout of American International Group made him angrier than anything in the recession. AIG took risk with unregulated products like hedge funds, I'm paraphrasing, while using cash from people's insurance policies. He said the government had no choice but to bail it out. Who knew AIG was the glue holding the world together, the global order together?
Bitcoin fixes this. We don't need folks behind closed doors making secret decisions about our hard-earned money.
This is of concern to me. And Ms. Hammer and Ms. Goldstein, if I can get to both of you, I'd like your comments on my concern. You've mentioned FSOC. I don't know how that will help us with a living will, for example. This is of concern to me. How do we manage a behemoth once it becomes so big that if it fails, it may bring a sizable portion of the economy with it? Nothing is too big to fail, but you can be so big that if you fail, you'll hurt the economy. So, Ms. Hammer, let's start with you.
Mr. Chairman, thank you so much for your question, and I fully agree with your statements about the importance of evaluating potential systemic risk where taxpayer dollars are concerned.
Taxpayers' dollars are already at risk. Does anyone have a valid number representing the amount of taxpayer dollars that are lost due to waste and corruption?
I often speak in my law class about the difference between an emergency response and a proactive policymaking framework. And the problem with an emergency response is that it's inherently backwards looking, and you create what's known as an emergency state relationship between the actors. We have the opportunity through the FSOC and Dodd-Frank Section 120 to create a proactive policy framework for cryptocurrency.
Bitcoin doesn't need a proactive policy framework. Bitcoin has its own policy. It's called financial inclusion and freedom for everyone.
That means gathering and evaluating data, coordinating the agencies, creating a committee that could consult with the many states that are legislating in this area as we speak, and consulting with international standard-setting bodies. And you mentioned living wills, Mr. Chairman. I think that's an important point because there are many aspects of our regulatory framework that still need to be ferreted out and relate to cryptocurrency. And so I strongly believe that's the place to start.
The place to start is to buy and hold Bitcoin.
And that we have resources to do it, and that by putting together our collective minds that we can tackle this problem.
Thank you. My time has expired. My apologies, Ms. Goldstein. But if you would submit comments for the record, I would greatly appreciate it.
Hey guys, that was a lot of fun. Please share this. We want to help some folks out.
I hope you liked the video. If you did, please subscribe and hit the bell button for notifications.